Welcome to Option Pairs Tools videos, part 2, Pairs Finder. Name's John Broussard. I'm going to be discussing how to use our list tool in Pairs Finder in optionsanalysis.com. In our list of usage, the list tool is where we're going to find stock lists with very low slippage and feed those lists into the new Stock Pairs Finder. When you log in, you'll land on typically the standard home page. At the upper right is a date box. Click on the little date icon, which brings up a calendar, and move it over to February 2014 and click on the date, the 24th of February. The website will update and the date box will turn gray. Hover over Website, come down to Lists and move to Filter Lists. Click it. When you get there, it will probably look like this. Click on Show under Wizard Criteria. You'll see that some of the wizard criteria are automatically turned on. Turn them all off. Come down to the bid-ask spread. The number 2 will be there. Change it to a 1. And under days, change it to a maximum of 90. We want only the short-term options. Under your stock list, you'll see many. And at the bottom are pre-computed lists. Select the ETF pre-computed list. And when you're ready, click Search. When you're done, and the web page returns, the stocks that are found in that list, and this number will probably change over time, and the top 172 will probably also change over time, but you'll get something that looks like this. Find one of your own lists at the top of the list options, select it, click inside the name box, backspace out whatever name is there, type in the name you would like for this new list to be, and I'm using ETF 1% pairs, and click on the Replace button, and these 172 stock symbols will then be saved in that list. They are ranked in order by their bid-ask spread average, i.e. the difference between the bid and the ask divided by the stock, represented as a percentage. The smaller the value, the less you have to give to the market maker to trade options in these symbols. Once you've saved off your list, go to the top, under Add-ons, come down to Random Walk and down to Pairs Finder and click it. Inside Pairs Finder, change the left side option symbol to DIA, which is one of the symbols we'll be looking at, and on the right side select the ETF stock list that you've just recently created. Leave everything else as default and click on Analyze. It will return pretty quickly, and you'll see the Pairs Finder output. The Pairs Finder output has a lot of information. I'm going to show you only some of the key items. The first is, note that it's started by the 180 short days percent change correlation. How much does the variation in stock price change day to day, and how much are they correlated? In this case, DIA and VIG are the most highly correlated percent change stocks out there for these two lists analyzed. Over a longer time period, they're still highly correlated, which is in this case 1 year. This column here is how good their actual stock price itself is correlated. It's also highly correlated. This is their combined bid-ask spread. Anything below 0.5 is good, below 0.2 is better. This is the cash spread history charts. I'm going to show them to you here, then go back to the presentation and discuss them a little bit more. But we can look at the 180-day cash spread chart, the 365-day cash spread chart, the 3-year cash spread chart. Notice how it's nice and oscillatory. And we can go into the future because we're currently in the past. Now, see how nice and oscillatory and stays between the purple and orange lines? this particular cash spread chart is. If you look at the other guys, also extremely highly correlated with diamond, it's not necessarily the case that you get that kind of behavior. For example, this one is definitely not very oscillatory. It definitely has a trend. It's hard to decide, is it done trending down or not? Diamond and SPY in an uptrend. Is it done trending up or not? No idea. Diamond and VYM. Are they done trending down or not? No idea. The only one that looks promising, that has behavior that looks predictable, is VIG and Diamond. The cash spread chart is a chart of the B term in the cash alignment formula. The cash alignment formula, which is discussed in the random walk books and is very commonly used wherever you see pairs trading, is a formula where we attempt to find a linear relationship between two stock prices using the simple equation y equal ax plus b. X and y are the stock prices. We assume y is the higher stock price, x is the lower stock price, and we find a by simply looking at the last close values, dividing them and forming their integer value. We get numbers like 1, 2, and 3, and 4, and so on. A pretty much is fixed in time, and all that's left, since we now know y, a, and x, is to discover what the b values are by simply subtracting the close prices in y from the multiplied close prices in x. So the cash spread chart B is almost very simply just the subtraction of two close prices. Now when there's a multiplier, it's the subtraction of y minus 2 times x, and so on. We are looking for B's that seem to be oscillatory and predictable. That is, if they're close to the high value in the history chart, we expect them to bounce off the high value and move back towards the orange value. And if they're at the orange value, we expect them to bounce off the orange value and move back to the purple value. That's definitely been the case for the cash spread chart for DIA and VIG, even over a 3-year time period. I'm going to show you later that DIA and VIG have generated pairs profits for 6 of the last 6 expiration dates. The green line in this chart is where the expiration date was and what happened inside the cash spread chart prior to that expiration date. If we were near orange, we should trade to go to purple, and if we're near purple, we should trade to go to orange. We'll look at the option pairs tool searcher in the next presentation.